Going back to financial markets now, Philippine shares end a volatile trading week in the red. The main index posting another flat finish after shedding just 2 points. But for the week, the PSEI is higher by over 3%. Regina Capital says investors looked ahead to the U.S. jobs report, which is set to provide further clues into the Fed's monetary action. As for the Philippine peso, it hit an intraday high of 58.90 against the greenback. It's near its all-time low, closing level of 59 to the dollar. To help us make sense of today's market movements, we're now joined by Sandra Araullo of ATR Asset Management. Good afternoon, Sandra. Welcome to Market Edge.
Good afternoon.
Yes, the index continues to move in a narrow channel, ending down 59.32 or 0.04% from yesterday's close. Now, what were today's market movers?
Looking at today's movers, there's no clear pattern that we're seeing. It's a mixed bag, I would say. I think the theme for the whole week is really a bit of consolidation after the sell-off we saw the prior week. So top performers have been BPI, Monde, ICT, pretty much offset by Ali, BDO. So it was a flat close for the day.
Yes, our value turnover was also quite thin at 3 billion only, with about 45,000 trades. Who are today's sellers? Mostly retailers?
We don't have that information yet, but I would imagine it's really those that have some adjustments that they're doing on their portfolios on the local side. Global managers might just be winding down on their selling, particularly connected, we think, to the weakness of the peso against the dollar.
Okay, charts now. Many issues are selling at oversold levels, based, of course, on RSI or a relative strength index, but there seems to be strong resistance at 6,000. We've been seeing this for a couple of days now. Where can it go from here? Trend reversal or a further dip to the next support?
You know, the RSI, as an indicator of momentum, really depends on the time frame that we're looking at. If you're looking at daily performance, yes, it looks quite oversold, and therefore that's why we're seeing a little bit of reprieve or consolidation at these levels. But if you go longer term, weekly charts, it's not quite oversold yet, so there is an argument to be made for maybe another leg down. But we think that, all things considered, the market is down, how much is it? Like 15% year to date. We're entering the fourth quarter. We might see some, a little bit of pullback from the recent weakness of the peso coming into year end because of seasonality, OFW remittances, holiday spending. So there is a good chance that for the fourth quarter, we might see a bit of a pullback. But I wouldn't really, I'm not that optimistic. If anything, it would be a sell on strength sort of proposition.
All right. Now, Sandra, about 3 months ago, or when the market level was in the 6,000, 6,500 level, things were different. We were seeing a lot of IPOs. In fact, there was a roadshow by the PSE for more IPOs, urging companies to go public. Now, current market conditions are, in fact, turning away businesses from going public, one of which is North Star Meat Merchants, deferring 2022 IPO plans, instead looking to strategic investors for capital infusion. Now, what trend are you seeing with IPOs in the pipeline, of course, against the backdrop of discouraging equities performance?
Yeah, I think those that have plans of going public may be shelving these plans in the meantime. There are other ways to raise capital that would be more favorable or optimistic to the corporate. So that's where strategy comes in. Of course, you want it to be favorable to the plans of corporates for why they are raising capital. And if it's for CapEx or strategic spending, they're better off raising it from, as you said, maybe private equity or strategic investors.
Right. Lastly, some prevailing business news stories today. They've been, of course, debt-centered or debt-themed. Now we have PLDT collecting 429 million from DITO for contracted services that have not been paid. Premier Horizon Alliance sued by its own director for non-payment of debts. Now, what are your thoughts on threats of company liquidity or even solvency issues under this current business environment where slowdowns are imminent? I mean, is it a valid assumption?
Yes, certainly. I mean, if we take a step back, really, since the global financial crisis, more than 10 years ago, it's been a tide that lifted all boats, no? So what we're experiencing now is part and parcel of a regular economic cycle. So, and the theme is really quality, consolidation, tightening of belts. It's not unique to our own market. Even look at the mega cap companies, Facebook, Google, Apple. They're all
Feeling the
tightening
pinch as well,
or
right?
cutting slack or cutting fat. No, so I think that's really what even PLDT is doing. It's really limiting their own exposure to the storm that is going to be passing by.
All right. On that note, thanks a lot, Sandra Araullo of ATR Asset Management. Thank you so much for your market guidance.
Thank you.